Good morning, good afternoon, good evening, traders, and welcome to the 923rd edition of Short-Term Trading Live with Oscar, and we are going to look at some great charts here today, traders. Today is Thursday. It's September 27th, 2012. It is midday, and I am here to tell you that we are done selling the S&P. We are done selling the NASDAQ. We are now looking for a turnaround and the upside. Remember what you are hearing. As of Thursday, we think the downside is capped, and we are now looking for more upside in U.S. indices. Traders, as we all know, futures trading can be extremely risky and can cause substantial financial loss. Futures trading is certainly not suitable for all traders, nor all trading accounts. If you do not have risk capital to lose, you should certainly not be trading futures. That being said, rock and roll. Let's see what we got. Traders, you're looking at the emini S&P daily bar chart. Of course, today is the 27th. It's a Thursday. It's midday. Here is my contention. Here's what we have. We were in a bull flag. We fell out of the bull flag, but in a fashion of 1, 2 big down days. Do you know what today is? Today is turnaround day. Today is turnaround day. Why? Because today is second big down day, 1, 2, in a bull market, right into support. On this day, you're a buyer, and we expect now the S&P to continue higher out of the bull flag and continue on through the top of it and just work its way higher. Today is your turnaround day. We are invoking the 2-day rule. Today we invoke the 2-day rule. That's what we are doing on this chart. This is what we expect. I will show you why with the daily and the weekly charts. This is a turnaround day. Let's go to a weekly. Traders, E-mini S&P weekly bar chart. If you recall, I showed this to you a few days ago. Put these arrows here and said support on the weekly is being tested. If we hold this support, then we like the market, and by Wednesday into Thursday, it should find its legs, and we should start to rally out of here. So far, that is what's happening. Let's stay big picture focused. Inverted head and shoulders right here. Left shoulder, head, right shoulder. Very bullish. Now we are in what's called an F flag. This is bullish. Coming out of the inverted head and shoulders into an F flag is what you'd expect. And then, of course, you have the entire channel since 2009 when the lows were made right here. And that is bullish in its own self. So the weekly chart is bullish for many reasons. We absolutely want to start buying the pullback today on Thursday. And we're expecting the OMNI projection, or at least the market to start working towards the OMNI projection. So there is your ES on the daily and weekly. Let's go to the NASDAQ. Traders, the NASDAQ, another big turnaround. It was below the channel, but you know what we're going to turn this into now? Here's what we're going to say. The 2-day rule is in effect. That's what we want to look at now. Big down day 1, big down day 2. We go right back up. We will be buying dips this afternoon. If there is a pullback in NASDAQ, we will be buying it, expecting NASDAQ to move much higher. There's your daily. Let's look at the weekly. Traders, your weekly NASDAQ chart. You've all seen this chart many times before. We call it a repetitive pattern. We had a pattern back here where the mouse is. Came down, rallied up into an F flag. We know that it took exactly 6 weeks to get there, and then it rallied. Here we had the same exact formation. It took exactly 6 weeks to make a new high. Since then, we've come down to this blue line. This is this week. It is holding. The settlement right now, or last trade, is right here at this red arrow. It's now back above the red line of the F flag. I think that it stays above. I think it moves higher. It settles somewhere up here. And then we continue on inside this F flag moving higher. That's exactly what this formation calls for. You've seen it on the daily in the S&P and the NASDAQ. You see it on the weekly. We have turned bullish as of Thursday midday. Let's go look at more charts. Let's convince ourselves technically that we are correct. Russell 2000 on the daily bar. It never really breached its bull flag, only for one brief moment. Remember, you need a minimum of And remember this for your own analysis. You always need 3 days settlement below or above any major formation before it's either negated or you call it what it is. You've only been down here for 1 day. That means no, we can draw a line through that. That's not what happened. It was just a 1-day test. Right back into the bull flag. Now we expect the end of Thursday and Friday to be like this in your Russell. That's your daily. Let's look at the weekly. Traders, this weekly chart is entertaining because the same chart I've been putting before your eyes day after day after day with this red check mark showing you that we expected a pullback. Exactly what we got. We did expect a pullback to this area where the 2 arrows are. Then we expect to come out of here and follow this red line higher. That's why this has been here. I've shown this to you in 3 videos in a row, and I want you to see it again because guess what happened as of today? If we remove some of this, look right here. We came right down to this yellow line, have held, and we're all the way up here by this arrow now. It looks to me like it's just going to continue higher today. It'll settle higher, and tomorrow we will start our rally right back out of here. Remember, traders, there was a theme in our last video I put on YouTube. Do you remember the theme? Traders, this was the theme in my last video. No matter what you do, I said do not fall in love with the downside of this move. You know that I have been bullish all along and that we were just going to sell for a couple of days and then expect the rally out of here. Do not fall in love with the downside. So do not fall in love with the downside no matter what happens here, traders. That was my advice, and here we are on Thursday following that advice. We were short, we got out of shorts, and now we're looking to be long going into the end of the week. This market's already starting to go. I would love to get us long. I will try to get us long somewhere, but we've had a great week already, traders. We've nailed the grains many times. We've nailed the S&P. We've nailed the euro many times this week. I'm not going to chase this. We have plenty of time to get in later this afternoon or Thursday night or Friday morning. But the S&P is starting to take off. So is the NASDAQ. Bravo for technical analysis pointing that out to us. But we're not done yet. Traders, the German DAX. We had a bull flag. The top of the bull flag got challenged, right? So the bull flag expands. The bottom of the bull flag gets challenged. So the bull flag expands. But you know what overall? It's still the bull flag. Look where it held. Right here. Look at this bad boy. It held right here at a conjunction of the bull flag and the support right here. Where they conjunct together. That's where you held. That is a perfect hold. This is a great bull flag. The German DAX is absolutely pointing us higher, and higher we will go. So do not fall in love with the downside. Was great advice. The DAX pointing Europe higher is great because the U.S. is already moving, and I think we go up from here. Traders, the next chart is dollar index, the daily before your eyes. Dollar index, look at this massive bear flag. Do you know where we're going once we come out of this bear flag? Can anyone guess? Follow the magic arrow. This is what a bear flag should produce, and if the dollar moves lower, it will propel the stock market higher. It is what we expect. That dollar is extremely bearish looking. That's a big bear flag. And I think the dollar will react on the downside, which should propel the stock market higher. That's your dollar daily. Let's go look at the weekly. Traders, your dollar index weekly bar chart. Look how it has fallen out of this parallel channel. It does not look good right here. It is creating a new downward spiral parallel channel now. It doesn't look good right here. And if you look at today, today is one of those weird swing days so far. Look. Swing week. It's a swing week so far. Not looking bullish at all. I do not like the dollar index here. I think you sell rallies in dollar index. That's what shapes up on the daily and weekly. When you see a dollar index looking bearish, you can expect a bullish stock market. But we are not done here. Let's move forward. Traders, the soybeans. I have mentioned day after day that soybeans looking heavy. Look at this channel that it's in. Very strong bearish channel. It keeps hitting the top of it and breaking, hitting the top and breaking, hitting the top and breaking. We expect more of the same. We do know that bear markets don't always go straight down, so you could get a couple of days up at some point, and once it hits its stop, I will watch it come right back down and jump back on it again. For now, we're selling beans into this line. We get above the line, we'll decide what to do with it. Beans have been bearish. We've been selling them all week successfully. Love the downside on the grains right now. Let's go look at another grain chart because I think you'll love this one. Traders, the corn chart. Another chart that we've been doing very, very well by selling into rallies. The corn chart. Omni was brave enough to get in front of a YouTube camera a little more than 3 weeks ago and say the corn has topped out. I put this topping tool on corn. It has been coming down almost every day since we've put this topping tool and called top on corn. And I must say, traders, we absolutely think the top is in. Look at today. More short for tomorrow. The corn looks very bearish. We will be selling it again on Thursday, again on Friday. We think the top is in. Corn belongs all the way down here, under 620. That's where we should get. Remember, traders, not yesterday, not the day before, but over 3 weeks ago, we called top. Now, if you look at what happened 3 weeks ago, you're up here. It's very, 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 very gutsy to call the top in a market that's just reaching its top. But I've used many techniques to call tops and bottoms before. I simply use the exact same techniques again on corn. They prompted me to do a video and tell you the top is in, and the top has been in ever since. Bravo, technical analysis. Calling the top in a market that boomed like corn, unbelievable. Go technical analysis. Now I'm going to take you to a couple of other charts that should convince you why we will move higher in the S&P. Traders, the Dow Jones Transportation Average Daily Bar deemed the leader of U.S. indices. As you've seen lately, this thing has just gone bonkers. We were in what we thought was this apex or this pennant right here. This red and this blue line. This pennant right here is what we thought we were in. And we thought that this was the false breakdown. So we said, look, false breakdown, let's get long. We bought the market, bought the market, bought the market. It got up here, and I said, you know what? This is very troublesome. And we basically at that point said, watch out below. The market did start to come off, and when it broke this line right here, some new development was made, and this was it. We recognized that this was not the false breakout. In fact, all it was an expanding apex or an expanding pennant, and instead this was the false breakout and we would go down. That's what prompted Omni to start going short in the beginning of this week. Now we're down here. This looks like a turnaround to me. I'd say that this area right here is a hold area, and from here we start to move higher. But I will say this, on the daily, the only chart not cooperating with the upside today is this transportation average. You look at this and you can almost call this some sort of a strange bear flag right here. What do I mean by that? Well, you know, this is an art, not a science. If you draw a line right here, let me darken that in so you can see it. If you draw a line right here and then go, well, is this some kind of a weird flag? You can almost pull a weird flag out of it. Right here, you can just about make a case for this being some sort of a flag inside these yellow lines. So I don't think that's what it's going to be. In fact, I think it's just lagging behind. It had its downgrades, 3 of its major stocks, which comprised 27% of the transportation average, were downgraded last week. The market took it on the chin. I think it is now priced into the market and we start to move higher because on the daily, just about every chart we looked at, daily and weekly, is bullish except for the transports. But let's look at the weekly transport. Traders, when you look at the weekly transportation average, suddenly things change. What you'll recognize is we're actually inside of a big bull flag, and right here we held the bottom of this blue parallel channel. We got through it slightly and held. This actually is a good development. It's a positive development, and it is bullish on the weekly chart for the tranny. So the tranny has joined us. It is now bullish as well, and we do expect these markets to move higher. So even the transportation average on a weekly basis is now starting to point north. I think it will continue in that direction. Now we're looking at the Dow Jones Industrial Average Daily Bar Chart. Very, very interesting chart. Let's look at it. Traders, we know it's the Dow. We know it's a daily. We know that we had this head and shoulders. We watched it work. Look at this wonderful projection. It actually made the projection just about perfectly. Then started this big parallel channel. Inside the parallel channel, you go from the top to the bottom, back to the top, back to the top, down to the bottom, back to the top, down to the bottom, back to the top. This time around, it only got halfway down and then started to head right back up. But understand where it got down to and why, traders. Let's look a little closer at this. Where it did get down to is right here, which is basically the highest high we were at before it took off and made this bull flag right here that you're looking at. It came right back down. It tested that support and now put in this new trend line, which is probably going to be simply a parallel of what's already happening here. Look, just expansion. Just a parallel anyway of the original parallel that was already here. And if you really want to look at this, it's a bull flag that only got violated very quickly. Here's a bull flag, and you can take the flagpole, boom. So it's really just a bull flag right here inside of this circle. It's a bull flag. It barely got violated down here, and it's on its way back up now. So the Dow Industrials Daily is joining us in our argument that the 2-day rule is invoked and we go straight back up for Thursday and Friday. I like it on the daily. Let's look at the weekly. Traders, your Dow Jones Industrial Average on a weekly. You got to love what you're seeing here. You're above this major resistance. You're inside this parallel channel. And because it's a weekly, this is a whole bunch of days. This right here, my friends, is a flag already formed. Remember, this is a weekly. There's 5 days in each one of these bars. You got 10 days inside this flag. That flag is formed. That flag is done. We leave the flag to the upside this week, if not next week. That's your fate. This is technical analysis. It's pointing. When it points, we listen. That's what's pointing. That's where we go. So now we've seen a lot of our indices. We've seen some grains. We're convinced certainly that the charts are pointing higher. Let's just look at what would make that for sure want to move higher. The bond market, traders. Here we are, bond daily bar chart. Huge, huge topping head and shoulders. I don't care what anyone tells you. That's what this is. And look at the development right here. This is what just happened. You could not get above this resistance line. You see, you got near it, stopped, and it's on its way back down already. This may have been your head test. This little area may have been your head test right here. This right here might have been the failed head test. From here, I think bonds get slightly heavier. So bonds are at resistance. Bonds are at major, major resistance. And I think that they are going to fail here and start to come back down. Then, of course, we have this. You have euro currency in a big bull flag, traders. Big bull flag here, euro currency. See it? This is a big bull flag. Dollars in a bear flag, euro currency's in a bull flag. Euro currency wants to move up. Dollars look like they want to move down. The euro currency moving up would bode well for the emini S&P moving higher. And that's exactly what I think we are going to get. Traders, that's my presentation. These are the charts I wanted to show you. I hope that these charts are helping to keep you in tune with markets moving forward. And I would like for you to join me at my OMNI camp, traders. If you would like to study with me here in Vegas for 4 days, I'm going to hold an OMNI camp trading session. I've still been deciding who gets to come out here. I've been qualifying a few of you guys on the telephone. There may still be an open seat. I'm not sure that I've got everyone qualified. Many, many of you have tried to come out. Some of you have been turned away. Some of you I will qualify. But if you'd like to come out to OMNI camp, you come on down to livewithoscar.com. Click the OMNI Camp banner, fill out the application, and I'll qualify you. OMNI Camp is in 5 weeks. You must get ready to come out if you want to join me. Traders, that's the class. Thank you so much for attending, baby. Thank you, thank you, thank you. I hope this helps to keep you in tune with markets moving forward. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.